Welcome to the Weekly Pivot for October 5th, 2025. So this week we will review last week, we'll talk about upcoming events, and we will go through the SPX chart. So talking about last week, we have been tracking this 75% green summer to green September stat since late August, and that ended up materializing, and we were able to confirm it last week with a green September. So something to keep in mind in the future, this is only the last 20 years. Typically September can be a little bit more bearish, but certainly if we see green summers, that's something that I'll be keeping track of in the future. The daily structure we talked about was bullish. We got the daily 21 test, the bounce, we had a flag on the daily, and then that broke out. We got continuation up to some of the levels that we were looking at, 6670, 6700, and beyond. We made it all the way to 6750. Coming up, so we've got the U.S. federal government that's shut down. Any changes there can create volatility. Also, a symptom of the government being shut down is obviously data releases are not happening. You guys saw that last week with some of the data that just didn't come out. Take data with a grain of salt until the government comes back online. This week, we've got the 10-year note auction on Wednesday. We've got the FOMC meeting minutes to see some insights into what people were thinking in the FOMC. We've got Fed Chair Powell on Thursday. It's just a pre-recorded welcome remark for Community Bank Conference in Washington, D.C. So I'm not expecting it to really be much. There's no presser or anything like that. It's just a pre-recorded message. So not really expecting much there, but I think people will probably be looking at it anyway. We've got the bond auction later in the day, and then we've got NFP if it does come out on Friday. We didn't get it last week, so if the government's back online, we'll get it this week. All right, so we've got an hourly chart on the left. We've got a daily chart on the right. Just reviewing what we talked about last week, we were looking for, either a pullback and continuation or just direct continuation. And we got that. We got beautiful continuation up to 6,700. This is the 6,700 level that we were looking for. We ended up gapping up to the 6,670 level that we talked about as well. Getting a beautiful pullback. We got this 1348 crossover on the hourly. This is RTH. We got a pullback to the hourly 21, and we got beautiful continuation. So that's a clean setup that I like to look for pretty regularly when we get these daily 21 pullbacks, and we get an hourly ribbon flip and then back. Beautiful move. I mean, we got 6,700 plus all the way up to 6,750 before retracing some of the move back to the hourly 21. But right now, this hourly structure looks really, really good. And I don't think we should fight a daily trend and an hourly trend that looks like this. Now, what does it look like if we continue higher? I think if we get continuation higher, pull back here, we get a bounce or we get a gap up, expect it to go test 6750 again. I think we can go test 6771, 33 or, 6775, and we can go even to 6800, which is our ultimate, target for the daily IHS. So certainly we can get continuation, and we're not that far from it. We're within 50 points at the peak of last week from that 6800 target. So certainly we can continue to push higher and go test some of these levels higher. So what does it look like if we start to break some key levels? Well, let's talk about what that kind of looks like. Obviously the hourly 21 is an important level to watch. This is RTH, by the way. Not extended hours. So the zoomed in daily, you can think about it like that way. We've got this 6,700 pivot. That is an important level, and we've tested it last week. We bounced off of it, almost made it back again a second time before we bounced off the hourly 21. And of course, we're testing the hourly 21 a third time, the hourly ribbon a third time. So certainly, some strength here. We're building structure. Still, the hourly structure is higher highs, higher lows. After we've sort of bounced off the daily 21. So my expectation is that we'll continue to follow that trend until it breaks. And so what it would look like if we start to break this down is I would look first for, a breakdown of the 6,700 level, and really 6,700 to kind of 6,680, including this monthly pivot. That's the prior monthly close. Look for that for kind of like a dip lower to go back and test this demand if that ends up happening. And of course, we lose this 6640 to 6660 demand. We can go and test the 6625 level that we talked about last week. That 6625 pivot is still relevant. And if you look, that's actually the daily 21 roughly right now. So certainly we could get a mean reversion. We've got this daily divergence. If that ends up playing out, we can get mean reversion again to the daily 21. But it requires the hourly structure to start to shift a little bit for us to get down there. At the end of the day, just trade the chart. This is what we see is going on. What people people feel about the market is going to be represented in the chart. And if we start to see major changes here, we can adjust our thinking. But as far as I can see right now, daily structure is up, hourly structure is up. No reason to fight it until you start to see the hourly structure shifting. And then, that can pull us back to the daily 21, and we'll go from there. That's your weekly pivot for October 5th, 2025. I will see you in the next one.